Morning, everyone. Welcome to Applied Economics. We're already at our 14th week, and for week 14, our topic is about taxation system and characteristics. So for this week, we will discuss the types of taxation and also the classification of taxation also in the Philippines. So let's proceed to our discussion. So for taxation, we have system of taxation. We have the progressive tax system, regressive tax system, and the proportional tax system. So I will show you a short video discussion regarding about the systems of taxation.
Important types of tax systems are proportional, regressive, and progressive tax systems. The main difference between them is how the tax rate changes in relation to the income of the taxpayer. Let's start with the proportional tax system. Proportional taxes require all taxpayers to pay the same fraction of their income regardless of how much money they earn. That means the tax rate doesn't change as the income increases or decreases. Therefore, this system is also commonly referred to as a flat tax. To illustrate this, meet John, Jake, and Jane. John works as a construction worker and earns $50,000 a year. Meanwhile, Jake works as a private investigator and earns $100,000 a year. And finally, the highest earner of the group is Jane, who works as an astronaut and earns $200,000 a year. In a proportional tax system, our three friends are all taxed at the same rate, let's say 20% of their annual income. In that case, John has to pay $10,000 in taxes, whereas Jake's tax bill adds up to $20,000 and Jane has to pay $40,000. As you can see, in this system, the burden of the tax increases proportionally to the income of our three taxpayers, because the tax rate is fixed. Next up is the regressive tax system. Regressive taxes require high-income earners to pay a smaller fraction of their income than those with a lower income. One of the most common examples of a regressive tax is a sales tax, which is a tax placed on the sale of a good or service. Because the amount of that tax is the same for all buyers, the fraction of income devoted to paying it decreases as the income of the taxpayer increases. To illustrate this, let's revisit our three friends once again. Now, assume they all bought a new car worth $50,000 with a sales tax of exactly 10%. That means they all have to pay $5,000 in additional taxes. Now, if we calculate the tax rate in relation to their income, we can see that John has to spend 10% of his annual income to pay the sales tax. Meanwhile, Jake has to devote 5% of his income, and Jane only spends 2.5% of her annual income to pay the exact same tax. So, relatively speaking, in this system, the burden of the tax decreases as the income of our three taxpayers grows. Finally, we have the progressive tax system. Progressive taxes require high-income taxpayers to pay a larger fraction of their income than taxpayers with a lower income. That means as the income grows, so does the tax rate. The idea behind this is that wealthy people spend relatively less on the basic necessities in life, so they can afford to pay more taxes and still maintain their standard of living. To see how that works, consider a progressive tax system with three tax brackets. People who earn up to $75,000 pay a 5% income tax. People who earn between $75,000 and $150,000 pay 10%. And people who make more than $150,000 pay a 20% income tax. That places John, Jake, and Jane in three different brackets. John only has to pay a 5% income tax, which adds up to $2,500 in his case. Meanwhile, Jake has to pay 10% of his income in taxes, which is equal to $10,000. And finally, Jane's income is taxed at 20%, which means she has to pay $40,000. Note that despite the higher tax rate, Jane still has more money after paying the tax than the other two, and Jake still has more than John. Therefore, the higher tax burden doesn't affect them as much because they can afford to pay more and still have enough money in the bank. So, let's sum it up once again. The three most important types of tax systems are proportional, regressive, and progressive tax systems. Proportional taxes require all taxpayers to pay the same fraction of their income, regardless of how much money they earn. Regressive taxes require high-income earners to pay a smaller fraction of their income than those with a lower income. And finally, progressive taxes require high-income taxpayers to pay a larger fraction of their income than taxpayers with a lower income.
So let's proceed back to our discussion. So this is our system of taxation. Once again, there was a great video discussion regarding about the system of
We can't
taxation.
manage work like this. That's
For a
why I
while.
use Monday.com.
So now let's discuss our characteristics of taxation. So for the characteristics of taxation, it is enforced contribution, so forced charge, and it is payable in money, of course, proportionate in character and based on the ability to pay. Also, it is levied on person, property, acts, privileges, or taxation transaction. So alam naman natin na ang tax ay binabayaran and of course in a form of money. And lahat ng bagay ngayon may tax, mapa-grocery, mapa-bahay, mapa-lupa, mapa-sasakyan, kung ano man yan, lahat yan may tax. Even yung sahod mo ay binabawasan din, I think so. Correct me if I'm wrong. Also levied by the state which has the jurisdiction or control over the subject to be tax imposed by the state within its jurisdiction and levied by the lawmaking body of the state by legislature and levied for public purposes. And then the next one that we will discuss is the tax violation. So all systems of tax administration provide penalties for violations of tax law. They fall under two classes. So those apply for sheer failure to comply with the tax law at any point through neglect, inadvertence, inability, or misunderstanding. Also, those motivated with the deliberate intent to evade. So when there is no evident intent to defraud the government, the tax penalties are ordinarily moderate. So sometimes it is at a substantial rate or on the omitted amount of tax or the delinquent tax is the only penalty after a certain period of delinquency has elapsed. So ito yung for our tax violations. Next that we are going to discuss is theories or basis of taxation. So I will show you another short video discussion regarding about this one. So we have here our theories and basis of taxation. So let's listen to this video discussion. And I will just post it on our GC Google Classroom, the link for this one.
Number one is the lifeblood theory. Ano yung lifeblood theory? Ano ba yung lifeblood? Bakit tayo nabubuhay? Because of our blood, no? Na nagsa-circulate, nagdadala ng buhay sa buong katawan natin, no? So taxes are like the blood, na sabi dito, no? Taxes are the lifeblood of the government, and their prompt and certain availability is an imperious need, no? This is in the case of Commissioner of Internal Revenue versus Pineda, GR number L-22734, 1967. So very important po yung taxation or yung taxes kasi yan po ang pinakabuhay ng gobyerno natin. Taxes are the lifeblood of the government and should be collected without unnecessary hindrance. It is said that taxes are what we pay for civilized society. Without taxes, the government would be paralyzed for lack of the motive power to activate and operate it. No? So, CIR versus Algae, GR number L28896, 1988. So, ang taxes, since buhay siya ng gobyerno, napaka-importante po niya, no? Na pagka wala yung blood, parang sa tao, mamamatay siya, hindi na siya makapag-operate. The second theory for the basis of taxation is the necessity theory. The power of taxation proceeds upon theory that the existence of government is a necessity. Bakit necessity yung existence ng government? Kasi itong gobyerno ang namamahala at saka nagbibigay benepisyo sa mga tao. That is cannot continue without means. It has the right to compel all citizens and property within its limits to contribute. So, since necessity theory siya na yung mga tao magko-contribute para mag-exist yung gobyerno at may magamit na panggastos yung gobyerno. The power to tax is an attribute of sovereignty. No? So, it is a power emanating from necessity dahil sa pangangailangan. It is a necessary burden to preserve the state's sovereignty and a means to give the citizenry. No? So, ano yung pinoprovide sa atin ng taxation? An army to resist an aggression. No? So, pinoproteksyon tayo ng army. A navy to defend its shores from invasion. No? Yung ating mga karagatan para hindi tayo invade ng mga dayuhan. A corps or of civil servants to serve. No? Kasi yung ating mga government agencies, kung wala yung mga empleyado, sino magsiserve? Public improvement is signed for the enjoyment of the citizenry and those which come within the state's territory. Ito yung mga public improvement, mga structures, no? So, mga daan, kailangan yan para maayos yung paggalaw ng mga tao. Facilities and protection which a government is supposed to provide, no? So, Philippine Guarantee versus Commissioner of Internal Revenue, GR number L 22074/1965. The obligation to pay taxes rests upon the necessity of money for the support of the state. For this reason, no one is allowed to object to or resist the payment of taxes solely because no personal benefit to him can be pointed out. Kasi itong sinasabi na personal benefit, hindi mo masasabi na personal mo yun kasi public, no, yung benepisyo na binibigyan ng gobyerno natin. But of course, yung public na serbisyo na yan, it redounds to the personal benefit ng bawat isa that avails of that benefits, no? So under Lorenzo V. Posadas, GR number L 43082/1937. So yun po yung case on the necessity theory. Number 3, or the third theory, is the benefits protection theory or the symbiotic relationship. So, nag-i-exist yung gobyerno, nag-i-exist yung tao, nagtutulungan. This principle serves as the basis of taxation and is founded on the reciprocal duties of protection and support between the state and its inhabitants. Ano yung symbiotic relationship? Dalawa kayo, pareho kayong may obligasyon sa bawat isa. Ang tao, obligasyon niya na mag-contribute sa gobyerno. Ang gobyerno naman, obligasyon niya na ibigay yung benepisyo ng mga tao. Despite the natural reluctance to surrender part of one's hard-earned income to the taxing authorities, every person who is able to must contribute his share in the running of the government. So, kaya nga natin, example, inadapt yung value-added tax system of taxation. Bakit? Kasi lahat ng consumer, doon dinaan yung pagkukolekta ng buwis dahil lahat ng tao nagko-consume. So, ibig sabihin, lahat ng tao nagbabayad ng VAT, no? Which is the value-added tax, which is a business tax. The government, for its part, is expected to respond in the form of tangible and intangible benefits intended to improve the lives of the people and enhance their moral and material values. This symbiotic relationship is the rationale of taxation and should dispel the erroneous notion that it is an arbitrary method of exaction by those in the seat of power. So, Commissioner of Internal Revenue versus ALGE or SOPRA. So, hindi ibig sabihin yan na exaction yun, pinipilit yung mga tao para magbigay ng contribution para ibigay doon sa kung sino man yung nakaupo sa gobyerno, no? So, hindi po ganun. Ang taxes natin ay para sa gobyerno at gagamitin para magbigay ng serbisyo sa mga tao. So, with that, I would like to say thank you, and the purpose of our tax training is for you to have better tax compliance.
So this is a great video discussion regarding about the theories of taxation. So let's go back to our discussion. So once again, lifeblood theory, necessity theory, and so on and so forth. So these are the theories or basis of taxation. The next one is basic characteristics of a sound system or key fact. So this is the basic characteristics of a sound tax system or key fact. Fact meaning F is for fiscal adequacy, A is for administrative feasibility, and T is for theoretical justice. So a sound tax system must be sufficient to meet government expenditures. Also, it should be capable of being effectively enforced and based on the taxpayer's ability to pay. So it should be fiscal adequacy, administrative feasibility, and theoretical justice. So that is for our fact. So next one that we have is the classification of taxes. So these are the classification of taxes. We have as to subject matter, as to burden, as to purpose, as to measure of application, as to rate. So let's watch a video discussion again regarding about the classification of taxes.
And part 4 of our discussion on the basic principles of taxation. Taxes. Taxes are enforced contribution levied on persons and property by the lawmaking body of the state by virtue of its sovereignty in order to support the government and all public needs. Taxes are enforced contribution that even if we as taxpayer, we are quite hesitant in parting our hard-earned income, we have our obligation to the government. It is an enforced contribution. Buwis. Generally payable in money. Generally payable in money. Can the taxpayer offer to the government or tender to the government that he does not have cash or money, therefore he will simply tender his laptop as or in payment for his assessed tax? Answer is no. Because tax is generally payable in money. Ma'am, why is it that there are instances that the government forfeits? The government forfeits either personal or real property of the taxpayer. This taking away of the personal or real property or properties of the taxpayer is in furtherance of the remedies available to the government in case of the taxpayer fails to pay his taxes. Remedies available to the government, either in the process we call as distraint or levy. But if you are the taxpayer, taxes are generally payable in money. Taxes are proportionate in character because this is based on ability to pay. Later, we will discuss direct and indirect tax, the application of progressive system of taxation vis-a-vis the regressive system of taxation, and we will apply the ability to pay theory or equality. Taxes are levied on persons, property, or exercise of right or privilege, depending on the nature and the kind of tax levied by the state which has jurisdiction over the subject or object of taxation. Then we will be discussing also the situs or place of taxation that you need to memorize. Because it is a requirement that the taxing authority must have jurisdiction over the subject or object of taxation. That is levied by the lawmaking body of the state and must be levied for public purpose, which involves social welfare and health projects of the government, construction of roads, bridges, assistance to the victims of calamities, to the victims or patients of COVID-19, and etc. That it must be levied for public purpose. Classification of taxes. As to subject matter, taxes may either be personal, poll or capitation tax, property tax, or excise or privilege tax. Personal, poll, or capitation tax is imposed on persons residing within a specified territory without regard to their property or occupation. An example for this, and as I mentioned in our previous lecture, poll capitation, previously cedula. The classical example for this is the community tax. That when you pay the community tax, you will be issued community tax certificate as proof of payment. Property tax is a tax on property, whether real or personal. An example for this is the real property tax. Yung amilyar. For lands, buildings, improvements, we are paying our real property tax. Whoever is the tax declarant. Pag sinabi natin tax declarant, not necessarily the owner of the property. That is misnomer. But generally, and usually, the tax declarant is the owner of the property. But there are cases that the owner is not, the registered owner is not the same as the tax declarant. Amilyar po yan. Real estate tax, and that is a local tax. Excise or privilege tax is imposed upon the performance of an act, enjoyment of privilege, or engaging in an occupation. Example, income tax. When you derive income, you are given the privilege by the government to earn the said income. Income tax is excise or privilege tax. Let us not confuse the word excise here as excise taxes on non-essential goods such as liquor, cigarettes. No, let us not confuse ourselves. This is excise or privilege tax as a classification or kind of taxes with reference to subject matter. Another example is estate tax, donor's tax. These are excise or privilege taxes. Classification of taxes as to who bears the burden may either be direct tax or indirect tax. Let us illustrate. Assuming that we have Mr. Negosyante. He is engaged in selling of face masks, PPEs, and medical supplies. In this time of pandemic, Mr. Negosyante is the only one who is happy because he is deriving more income. The only one. Now, in deriving his income, he will be subject to income tax. And Mr. Negosyante is our taxpayer. Now, the incidence of taxation falls on Mr. Negosyante being the taxpayer. Now, who shoulders the burden of the tax? Who shoulder the burden of the income tax? It is likewise being shouldered by Mr. Negosyante. The taxpayer also shoulders the burden of his tax. The incidence of taxation and the burden of taxation falls on the same. And that is our subject, the taxpayer. Income tax is a direct tax. The incidence and burden falls on the taxpayer. Now, Mr. Negosyante, in the course of his business, is also liable to the payment of value-added tax. Value-added tax is a business tax. Income tax is different as to nature. purpose, no? From that of value-added tax. However, the nature and characteristic of value-added tax is that it can be shifted to the customers, to the buyers. That ultimately it is the end user who shoulders the payment or the burden of the tax. Mr. Negosyante can shift the burden of paying the value-added tax to mamimili. And that makes value-added tax an indirect tax. If the burden of the tax can be shifted to customers, buyers, or clients, whether it be sale of goods, properties, or services, etc., then the tax is an indirect tax. Now, just remember the distinction. If the burden of the tax can be shifted can be passed on to the customer, client, then that would be indirect tax. If the burden is shouldered by the taxpayer itself, himself, herself, then that will be a direct tax. Now, we have this constitutional limitation that we mentioned in our previous lecture, that the state shall evolve a progressive system of taxation. What is meant by progressive system of taxation? We should not confuse that with progressive tax rates. Progressive system of taxation implies that in our tax system, we should have more direct rather than indirect taxes. And that is the reason why business taxes, value-added tax, time and again, has been the subject of oppositions. They are questioning the validity or legality of the value-added tax being an indirect tax. Abacada Guro, Party List versus Secretary of Finance. What is the ruling of the Supreme Court? The EVAT law, the VAT law, is valid. Valid. Because if you will try to look at the Philippine setting as to our tax system, we have more direct taxes compared to that of indirect taxes. Ang kaso nga lang, for indirect taxes, madali i-audit kasi based siya sa gross. Compared to, say, income tax, based on the net, based on the taxable income. There are benefits on the part of the government, there are benefits of indirect taxes. Another point. Ma'am, you said in the previous lecture that in the Philippines, we do not have regressive tax rates. But if you will try to look at commentaries, indirect taxes, business taxes, excise tax on tobacco, cigars, or liquors, are somewhat regressive. Ma'am, you are wrong in saying otherwise. Now, we have, as to tax rates, as I told you, taxes may either be progressive, proportional, or regressive. As to tax rates, we do not have, as the tax base increases, the tax rate decreases. That is as to tax rates. But as to implication or effect to the taxpayer, it may happen that we have some sort of regressive, and that is somewhat contradictory to the progressive system of taxation. And that is regressive system. Now, say that we have a minimum wage earner, and then he is purchasing goods like Jollibee, subject to value-added tax. Why am I paying value-added tax? It should be Jollibee paying. The burden should be on Jollibee. Dahil mayaman ang Jollibee. But value-added tax is an indirect tax. The burden can be shifted to the buyer, purchaser, or customer. That is why they are contesting the validity of the law. But it is valid. Indirect taxes are valid. But as I told you, in our system, we have more direct rather than indirect taxes. And we are complying with the progressive system of taxation. Again, the effect of indirect taxes is somewhat regressive. But we do not have regressive tax rates in the Philippines. Regressive system, perhaps. Or you take note of the direct and indirect taxes. Other classification of taxes. As to determination of amount, taxes may either be specific or ad valorem. A specific tax is fixed amount by head, number, or some standard of weight or measurement. It is based on standard of measurement. Example for specific tax is excise tax on distilled spirits, wines, or liquors. And some of our customs duties are based on weight or unit of measurement. Ad valorem. Now, this is based on the value of the subject matter assessed. Based on the value of the subject matter. Income tax, based on the amount of the income you earn. That is ad valorem. Real property tax, based on the value of the property. That is also ad valorem. Estate, donors, value-added tax, these are ad valorem tax. As to purpose, a tax may either be general, fiscal, or revenue, or special or regulatory. This is the secondary purpose of taxation. As the term itself suggests, general, fiscal, or revenue tax is imposed to raise revenue for the general purposes of the government. Income tax, value-added tax, estate, donors, excise taxes, normally, fiscal or revenue tax. Special or regulatory, this is a tax imposed for special purposes. Say, customs duties. Value-added tax on importation. Yan, to regulate. That may be special or regulatory tax. As to imposing authority, the tax may either be national tax or municipal or local tax. If it is imposed by the national government, then therefore that is national tax. Our national internal revenue taxes, as well as the customs duties, these are imposed by the national level or the national government, and therefore national taxes. Now, if it is imposed by the local government unit, then that is municipal or local tax. Say occupation tax, sun and gravel tax, some of the amusement taxes or business taxes, local. And then we have professional tax, real property tax. These are municipal or local taxes. As to graduation or rate, taxes may either be proportional, progressive, or regressive. And this we already mentioned in our previous lecture. Proportional, based on fixed percentage of property, receipts, or other basis to be taxed. Value-added tax, 12% rate. That is proportional. Income tax, particularly corporate income tax, that is proportional. Some of the final withholding taxes are proportional. Basta fixed or constant yung rate. Still consistent with the progressive system of taxation, ability to pay. Because if you have more, proportionally, your tax will also be higher. Diba? Now, progressive, the rate increases as the tax base increases. Individual income tax, that is progressive. Okay, regressive, the rate decreases as the tax base increases. Okay. Let us distinguish tax from...
So that is for our classification of taxes. That is a great discussion. I will just post our video link for this one. So next that we are going to discuss is definition of taxpayers classification, and of course the tax code for this one. So I will show you another video discussion regarding this topic. So this is a video made by Sergis Real H. Ras. So this is the classification of taxpayers or individual taxpayers for Filipinos and non-Filipinos. So let's take a look at this video.
Instructor for today. So today we'll discuss gross income. So anything about gross income, its sources and components and how it is computed. So we'll discuss that in this lesson. However, this lesson is divided into several videos and parts. So for this video, we'll focus on the classification of the taxpayers, particularly the individual taxpayers. At the end of this lesson, you'll be able to classify the individual taxpayers in their tax situs, and of course, identify the items included and excluded in the gross income of the taxpayer, classify a taxable and non-taxable income, categorize which income is subject to normal tax and final tax, and finally, to compute the gross income and non-taxable income in accordance with the tax code. So if you're ready, let's jump in. So before we begin our computation on what is excluded and what is included in the gross income, let us first understand who is a taxpayer. So a taxpayer is someone who is required by the law to file and pay their tax as imposed and prescribed by the National Internal Revenue Code. A taxpayer may be classified as an individual taxpayer or a corporate taxpayer. When you say individual taxpayer, this is a natural person, of course, with life, living, okay? And when you say corporate taxpayer, this is an artificial being, or it could be a corporation or a partnership. Okay, so in this video, in this lesson, we will focus our discussion on the individual taxpayers because we'll have a separate discussion on corporate taxpayers, okay? So, the individual taxpayers may be classified depending on their citizenship and residence. Okay, so the taxpayers' residence and citizenship must be identified properly to account incomes which are subject to income tax. The situs or the location of taxation depends on the taxpayer's residency and citizenship. The individual taxpayers are classified into five, okay? So we have first, he can be a resident citizen or RC, or a non-resident citizen or NRC, or he can be a resident alien, or a non-resident alien engaged in trade or business or NRA-ATB. Or finally, a taxpayer can also be a non-resident alien not engaged in trade or business, or NRA and ETB. So these are the five classification of an individual taxpayers. So we'll discuss each of them later on. So a resident citizen is someone who is both a citizen and a resident of the Philippines, like you. You're a resident, you are residing, you are living in the Philippines, and also you are a Filipino. Therefore, you are considered as a resident citizen. Okay? So, in particular, to qualify for citizenship, one must have met any of the following requirements. So, there are several requirements. So, first, those who are citizens in the Philippines at the time of the adoption of the Philippine Constitution in 1987. So, any person who are classified as citizens at the time of the adoption of the Philippine Constitution in 1987 are considered as citizen. And those whose fathers or mothers are citizens of the Philippines. So if your mother is a Filipina or your father is a Filipino, then you are also a citizen of the Philippines. And those born on January 17, 1973, of Filipino mothers who elect Philippine citizenship upon reaching the age of majority, or those who are naturalized in accordance with the law. So any foreigner or any non-Filipinos originally who have naturalized their citizenship are also now considered as citizen of the Philippines. So when you say resident and citizen, you must be living in the Philippines, you must be residing in the Philippines, and must have the citizenship status of being a Filipino. Okay, so next is a non-resident citizen. A non-resident citizen is someone who establishes to the satisfaction of the Commissioner of the Internal Revenue the fact of their physical presence abroad with a definite intention to reside therein. So if you want to stay therein for a long period of time and then you intend to reside therein, then you can be considered as a non-resident citizen of the Philippines, or those who lives in the Philippines during the taxable year to reside abroad, either as an immigrant or for employment on a permanent basis. Say, for example, an overseas Filipino worker. So OFWs are considered as non-resident citizens because of the nature of their employment requires them to stay in the outside of the Philippines, or those who stays outside in the Philippines for more than 183 days. So if you are staying outside the Philippines for more than 183 days, then you are considered as a non-resident citizen of the Philippines. 183 days, actually 6 months. Okay? Next, we have the resident alien. So, resident alien is a foreigner, not an alien per se, which is outside of this planet. Okay, so resident aliens are foreign persons who have acquired residency in the Philippines. So those foreigners who have acquired residency in the Philippines are considered as resident aliens. So as a rule, foreign persons are considered as residents when the length of their stay or assignments in case of work are indefinite, or those who have resided for exceeding 2 years under the BIR rulings number 051 to 81-81 and 052-81. Okay? So 2 years. Like non-resident citizens, resident aliens are also taxed for incomes derived within the Philippines only. So by the way, resident aliens and non-resident citizens are only subject to tax for their incomes derived in the Philippines, unlike resident citizens whose incomes abroad and incomes within the Philippines are taxed globally. Okay, so altogether, so again, the resident alien and non-resident citizens are taxed only for their incomes within the Philippines. Incomes derived abroad are not subject to Philippine taxation. So next we have the non-resident alien engaged in trade or business. A non-resident alien individual is a foreign person who have not acquired residency in the Philippines, meaning he have not stayed for more than 2 years in the Philippines, as what the resident alien did. So any person who have not acquired residency but are doing business in the Philippines shall be considered as engaged in trade. So any person who shall come to the Philippines and stay herein for an aggregate period of more than 180 days, meaning more than 6 months, during any calendar year, shall be deemed as doing business in the Philippines. Like the non-resident citizen and resident aliens, the non-resident alien engaged in trade or business is also taxed for his or her incomes derived within the Philippines only. So any incomes derived abroad shall not be taxed in the Philippines.
My name is Ariel, and I just started my first job as a project manager. When I was a student,
Finally, we have the non-resident alien not engaged in trade or business. Any foreign person who shall come in the Philippines and stay herein for an aggregate period of not more than 6 months or not more than 180 days during any calendar year shall be deemed as not doing business in the Philippines. For example, tourists. They are taxed on their incomes derived within the Philippines at only at 25% of the total gross income. So any foreign person who comes in the Philippines and stay herein for not more than 6 months, and in case they earn incomes, they will be taxed at 25% in their total gross income. And this 25% is actually a final tax. So before they would receive their incomes, the payer of such income, so any payer of such income, shall withhold first the 25%, meaning shall deduct the 25% beforehand before this income will be paid to the non-resident alien not engaged in trade. So to summarize, we'll have this illustration. We have the income from sources within the Philippines. This is the situs. Okay, when you say situs, meaning the source or the location, and then income from sources outside the Philippines. So for resident citizen, any income derived within the Philippines shall be taxable using the normal tax. When I say normal tax, this means the graduated rates or the 8% optional rate or the final tax. And any income from outside of the Philippines shall be also taxable if you are a resident citizen. However, if you are a non-resident citizen, any incomes from sources within the Philippines shall be taxable. When you say non-resident citizen, these again are Filipino citizen who are not residing in the Philippines or who have resided in outside of the Philippines, such as OFWs and immigrants. Okay, so they would be taxable only if they derived income from within the Philippines. So any income from sources outside of the Philippines shall not be taxable in the Philippines. Of course, these incomes coming from outside the Philippines shall be taxed on the country or location where these income are derived. But for Philippine taxation purposes, these incomes derived abroad are not subject to income tax. Okay? Also, for resident alien, these are foreign persons. These are non-residents. These are non-Filipinos but have acquired residency in the Philippines. They are also subject to tax for their incomes derived within the Philippines. Okay? And then any sources or any incomes from sources outside of the Philippines shall also be non-taxable. So, for example, if you are a foreigner, if you are not a Filipino, and then you have stayed here for more than 2 years, then you would be considered as resident alien. And then any incomes derived in the Philippines shall be taxed in the Philippines, but your income from sources abroad shall not be taxable in the Philippines. Also, for non-resident alien not engaged in trade or business, the same is true for income from sources within the Philippines and for income from source outside the Philippines. So actually, the other four taxpayers follow the same patterns. So for non-resident alien not engaged in trade or business, again, they would be taxable only if their incomes are from the Philippines. If their incomes are from outside of the Philippines, they would not be taxable in the Philippines. Okay? So, when I say non-taxable, again, it doesn't mean that they are entirely non-taxable. It just means that for Philippine taxation, these incomes derived abroad are not subject to Philippine taxation. But of course, the country wherein that income was derived will impose a tax on such income. And the unique part of the non-resident alien not engaged in trade or business is that all their incomes, whether from whatever source in the Philippines, shall be taxed at 25% final tax. So be it a compensation or business or whatever. So any income derived by a non-resident alien not engaged in trade or business shall always be subject to 25% final tax. When we say final tax, these are withhold before the taxpayer receive the income. Okay, so after you have understand the classification and tax situs of the different taxpayers, individual taxpayers, now let us proceed to the different types of income.
So that is our discussion for the classification of taxpayers, clearly discussed. So thank you for that discussion. So once again, we had discussed classification of taxpayers and also the theories of taxation and also the classifications of taxation. So for handouts or PDF files, kindly refer to it. Answer activity 1, total of 5 questions for that. So thank you so much once again, everyone, and God bless.